posted about this multiple times in the past, but I'm gonna keep recording and re-recording the same video until hopefully enough people are ready to receive the message, they watch the video and understand what I'm talking about. Of course, the topic that I'm referencing is mortgage broker versus direct lender. I keep seeing the same recycled posts on social media appear over and over, usually canned articles posted by realtors that are given to them by their agency or some other social media content facilitator. And all of these posts essentially have the same wording and verbiage, something along the lines of mortgage brokers are good because they're local, they're more convenient, but they always imply for some reason that mortgage brokers are a more expensive option for the consumer. And that's the part that confuses me, because there have been multiple independent studies that show that mortgage brokers actually save borrowers anywhere from, I think it was $7,000 to $9,000 versus identical loans with direct lenders. One of the common misconceptions is that you pay more for a mortgage broker because they're a middleman. But with any mortgage transaction, there's a loan officer involved, whether that loan officer works for the bank directly or they're a mortgage broker, there's a loan officer involved, so there's no additional parties whatsoever. Also, borrowers do not pay the mortgage broker directly in most cases. We get paid by the lender for delivering the loan to them, so that's not going to be a charge or an additional fee that a borrower is going to incur. I don't think that this sentiment is shared maliciously. I think it's just ignorance. People don't know better. I speak to a lot of other mortgage lenders here in town, and almost none of them really know what a mortgage broker is. They can't articulate what the difference is between a broker and the wholesale channel versus a retail lender or a correspondent lender. They just don't know. So many loan officers just go into the office from 9 to 5 every day without being a student of their craft. They're not going out and learning about the industry that they work in, so the fact that they don't know the difference between the wholesale channel and the retail channel kind of makes sense. And I will put this out there, not trying to throw shade at anybody, but all mortgage brokers have to be licensed through the state. Now, if a loan officer works for a bank or a bank-owned mortgage company, they don't actually have to be licensed by the state. They get an NMLS number through their employer. It's a number unique to every loan officer to identify them and track them, but they don't actually take the federal SAFE exam to where they have to pass the test and get licensed in that manner. And these unlicensed loan officers really seem to be the ones that treat this as a job and don't go out and try to learn about the industry or understand nuances. And as with anything in life, there's pros and cons to both sides. Realistically, the most important part of shopping for a mortgage lender is more dependent upon the communication and responsiveness of the individual loan officer, more so than the company that they work for. Going along that same thread, it's not uncommon for first-time home buyers to go to Google and type in something along the lines of, what questions should I ask my mortgage lender? Because they've never done this before, they really don't know what to look out for, so the natural reaction is to go to Google, which I applaud. It's wonderful that they're taking the initiative to try to learn the process before contacting mortgage lenders. When I went to Google and performed this search, I came across what is essentially the same article on multiple websites. In this case, I've pulled it up on homelight.com. I don't know what Homelight is or who they are, but this is essentially the same article word for word that keeps coming up. So how much mortgage do I qualify for? Best way to utilize my down payment? What types of loans do you offer? What about interest rates? What rates am I qualified for? What type of mortgage would be best? How much should I put down? These first 7 questions are all things that any rookie loan officer is going to address without having to be asked. Number 8, are there any down payment assistance programs available to me? It's a fair question to ask, but realistically, down payment assistance should only be used if absolutely necessary, if that's the only way for a first-time home buyer to come up with a down payment, because as we all know, free ain't free. There's a catch in there somewhere. Yeah, down payment assistance sounds great, but it's going to come with higher interest rates, higher closing costs, and you do pay for it in the end, and then some. Do you offer points? Loan officers should be addressing that regardless of being asked or not. Average closing time frame, do you guarantee the closing date? This one's interesting. What is your average closing time frame? The answer for me is 3 weeks at this point. And do you guarantee the closing date? No, I don't guarantee anything. We could have a Category 5 hurricane roll through town and we're not closing any loans for a while. What does the loan process look like? That should be explained by the loan officer without being asked. How often will you be in communication? Of course, we're going to communicate. Here's a big one that I want to address. Do you handle underwriting in-house? And this article here says some lenders do their loan underwriting in-house, which can make turnaround times faster and communication easier. This is what I seriously question. Where are people getting this? This may have been true 20 years ago when the mortgage industry dealt with fax machines and sent packages through FedEx and other courier services. But today in 2022, when everything's done electronically through email and documents are uploaded through a portal, we're in constant contact with our underwriters. And realistically, direct lenders who do have their own underwriters, half of them are working remote these days anyways. So even a lender having their own underwriters, there's a good chance that that loan officer is in a different time zone from their underwriter. The other thing to consider is that as a wholesale lender who has relationships with a number of different lenders, lenders call us for business. We are their customer. So if their underwriters aren't picking up the phone when we call, and if they're not communicating with us and they're not fast with their underwrites, we're going to find a lender who does all of that, who gives us access to underwriters. And the lenders that I work with, if I pick up the phone and call an underwriter, they answer every time and they turn files around within 24 hours every single time. So this really hasn't been a factor in the industry in over 20 years. I think the reason that a lot of first-time homebuyers ask this question, whether or not we have in-house underwriting, is not because they necessarily care about that, but because they fear that they're going to be in the days leading up to their closing and all of a sudden the rug will be pulled out from under them and they're going to be denied the loan. And at that point, they've lost thousands of dollars in deposits and inspections, and they're not going to have a place to live. And that's a legitimate fear. That's something that people should worry about. So the better question to ask in this case, as opposed to do you have in-house underwriting, is what is your pull-through rate? And by pull-through rate, I mean, how many loans have you closed in your career versus how many loans have you pre-approved to not have closed because of a loan officer error? For me, my pull-through rate is something like 99.6%. I can think of one instance in my entire career that I've written a pre-approval letter only to have the borrower's loan get declined, and that was because I miscalculated their student loan payments. I had egg on my face, I learned from it, and that hasn't happened again. So my point is this: if you're researching mortgage lenders and trying to understand what your best option is, make sure that where you're getting that information from, A, isn't biased, that they don't have a hidden agenda, and B, that they know what they're talking about, because so many people in this industry just really don't know how the different channels and options work.